Alrighty. Great morning. Right now it is 8:32 a.m. Pacific time, Pacific Coast. Super excited to come on today to give us some overview of what the market could potentially be looking like this week coming up. It's so funny because every single time you look at the market, it just gets more and more and more interesting and just continues to expose how unpredictable this market is. However, the information that we have, the education that we have behind this market is what keeps us afloat. Okay, so right now, what we're going to do is just look at, for first of all, what the DXY. So who knows what the DXY is? DXY is the US dollar, right? Overall, right? Just by itself, okay, with no attachment to no foreign exchange or stock or cryptocurrency. Okay. So as we can see right here on the 12 months time frame, right? Let's just say for the on the year time frame, we can see that US dollar has been on a depreciation for the past few years. What does that mean? What does that look like? Well, let's put some tools to it. So let's say we have this was back in 1970 when dollar was valued at 123. In 1978, it depreciated down to 82. In 1984, it appreciated to 164, and that's the highest it's ever been. In 1991, it depreciated lower than the previous low to 77 and never went as high as it previously did. The highest it got to was about 120. And if we want to be technical, that's giving us left shoulder, right shoulder. And obviously, when we see left and right shoulders like that, it means one or two things. Because it's on the aspect of because of the position that it is right now is given can potentially continue to go bearish in the future, or it could just break above this area to go to continue bullish momentum. Okay. So now the goal is for price to break above here. And then let's say once it does, the day it decides to do so, it might just continue to go bullish. Okay. So just remember, ladies and gentlemen, right now, all we want to see for DXY over the next few months, because like I said, this is on the 12, this was in 12 months time frame, is for price to be able to break above this area to continue going bullish, or for price to get to this area to continue going bearish. Okay. At least, even if it was to get to this area and the bears come in and it depreciates down to 100, it might just continue going bullish. You never know. Okay. However, we just need to be on the lookout. Okay. So, with that in mind, we can also see, and as we go lower and lower and lower in time frames, we can see that price also has some in between movements, right? So we can see, I don't want to do it from the 6 months time frame. Let's just go down to the monthly itself, just for the 1 month, nothing too crazy. So we can see that in between those long moves and those short moves, they're also in between interactions. So we have this low, high, higher low, higher high. And obviously, because of our knowledge in the market as well, we also understand that now that we have a higher high, what's most likely going to be the next move? It most likely will be a higher low. Okay, cool. So let's even go lower to the weekly, right? So now we know that right now, price, if we're to look at based off market structure, okay, And remember, like we said, we have this high, we have this low, right? So based on microstructure right now, let's say we're to turn into a line chart, we can look at and see that price currently right now is at a zone. Okay. Now, the question is, what zone is this? Well, that's a phenomenal question. How many of us knows what supply and demand is? Well, if we don't know, I'm just quickly going to introduce it to us where supply is pretty much where price gets to and distributes. Demand is where price gets to accumulate. Okay? So as you can see right here, the same way we have the zone above, we have another one below. Okay? It's very simple, very straightforward, nothing too crazy. Okay? All right. So remember, this right here, this zone right here is from the 12 months, it's from the yearly time frame. Okay. This in between sections now are in the monthly, they're all monthly time frames, right? 12 months equals 1 year. Okay. So now we're just looking at directly from the 1 month, which is where we got these zones right here. Okay, so we got these zones from the monthly. Okay, and I like to use the line chart because it just gives us better accuracy on body to wick approximations, right? Body to wick. Because remember, for you to find anything accurate, you want to know where the body, know where it started, and you also want to know where where things started and where things ended. Okay. So just wanted to just quickly put that out there for everybody to just have a little bit of understanding as to how supply and demand works. Okay. All right. Awesome. So you know what we can also do? We can even make it even more interesting where let's say we go back to the 12 months time frame, and because now we want better accuracy, is now we can really know what's going on and where we are in the market. What we can do is even change the color of the box of the zone, right? So I could even put it to be any color of choice. I could just randomly put it to be let's just say we put it to be yellow. Well, we already have yellow as on the daily time frame, so let's just say we put it to be green. Actually, no, green is sells as a 4 hour time frame. So let's just say we put it to be, let's say something random. Sometimes I find it so hard. Sometimes those pick colors. Well, let's just say we go with something like no, that's already serving for a different purpose. Okay, let me see here. You know what? I'm just going to use gray for my own sanity. Okay, perfect. So we're just going to call this save as yearly. Okay. All right, cool. So now we know, okay, this is on the yearly time frame. So we know like, okay, 12 months, a while back, on the 12 months time frame, this was the highest point. Okay, this was the highest point, and it got this low. Okay. However, based on recent time frame, based on recent price action, we are currently at this zone. Okay, we have this zone, and we have this push us towards the upside. The only difference is now that prices come back to that same supply zone that has now turned to demand technically. And the reason why I said technically is because if price decides to, which it did obviously last week, it closed below this area, this zone, right? It closed below this zone. So now technically, price can decide to either continue going bearish, right? It can decide to continue going bearish, but it has to retrace a little bit, right? Last week we saw that price was on a bullish momentum. Okay, so we saw this candle right here. Cool. Sounds good. And we can also see that Joseph levels that price respected over a certain period of time. We can even put, let's just say we'll put this horizontal ray right here. Okay, we're just gonna put that and just call it, it's regular, 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 regular. Okay, horizontal array. So we can see that price, over the past few weeks, okay, has come to different touch points. One, two, three, four, now five. Which means for price to still be coming to the same area every single time, every single over a certain period of time, that means that's a strong zone right there. That's a strong area. That's a strong price point that price consistently continues to reject. And obviously, if we know about quarter points, we can also see that we have 100 right is also a major level, so it makes also adds to the confluence. Okay, so I wouldn't be surprised if price decides to just, now that it's come to the same level for the fifth time, if price decides to not continue going, correct to go bearish, but more so correct and not just correct, but more so break above the zone, probably go even higher to continue going what? Bullish. Okay. So it can continue going bullish to this area, or it could, like I said, it could continue going bearish from this area, depending on what happens in this zone. So pretty much, ladies and gentlemen, this zone right here that we're seeing is very, very delicate. It's very, very important that we pay really close attention to this over the next few weeks, okay, for the US dollar. Because what can potentially happen is, if, like I said, if price breaks above, it can continue going bullish. If price breaks and closes, which already broke and closed below, it doesn't to just touch that area again to see if it wants to continue going bearish based on how strong the area is. Okay? Because also, if you want to be technical as well, we can also look at this areas, right? And remember, we had price do this here, so now we're going to do the same thing over here too. So 1, 2, 3, 4. Right? So those are 4 areas that price, you know, which means this is a nice consolidation zone right here. Right? Price is just consolidating right now. That means there's no move really happening as of yet. Right? Obviously, this is on the weekly time frame. So the lower you go in time frames, the more traffic, the more details you can get. I don't need to go any lower because like I said, I'm not getting into the chart. I'm just doing an overview. Okay. So all I need to know is just what zone am I in, what area am I in, and what am I looking for. Okay. It's very simple. Price action. Just follow the price. Right. And as you can see from a daily standpoint, because we're still in consolidation, ladies and gentlemen, right, we can still see a flow. Right. We can still see a high, low, higher, high, higher, low. So technically we can not even just high, low, high, high, higher, low, because that's the upward momentum. We have a high, we have a low, we have a lower high because this is higher, this is lower than this high, but it's still a high point. And then we have a lower high, a lower low, which is lower than this low. So now technically, if you want to really follow price on a daily standpoint, price can potentially be looking to continue going bearish because, like I said, we're looking at high, low, lower high, lower low. So if price wants to continue going bearish, and we're looking for lower high, probably within this area over here for it to continue going bearish, which is why this is a potential, this one right here. But let's say it doesn't work that way, and price is saying, no, we're too good to just continue to depreciate in value as a country, as an economy, based on what's happening in the states and the news and all that good stuff, then price potentially we can see price potentially, right? Let's just say we want to use this place as an area of reference. We can look for price to potentially break above this, and obviously retrace back to have that solid confirmation that is going to continue going bullish, so that we can get that, we can ride that full wave with the within the institutional builders and the money makers and the money movers within this industry to be able to make this transition to the next phase. Okay. So this is just for the US dollar. So now, one thing I want to also make things very, very simple for us is once you know what the US dollar is doing, you can now go to other pairs. For example, gold, right? So look at gold, right? Gold, XAU, USD. XAU is in front, which is a major, and then USD is a minor, which means if US dollar is going bearish, that means XAU is overall bullish, right? So as you can see, that price has been going bearish for dollar. If we go to XAU, for example, we can see that price has been going what? Bullish. You see that? Right? And this is on the weekly time frame, guys. Okay. Same thing goes for other pairs. So just know where you are. And then if the US dollar is in front, then it will continue going bearish as well, because like I said, dollar is already going bearish. So US JPY is expected to be bearish as well, because JPY is a minor, but it's on the bullish momentum. And on the other side, that's why, when you pair up with a major pair like US dollar, whatever that's happened to dollar overall, whether it's bearish or bullish, the opposite has happened to the other pair. And if the US dollar is the major pair and the other one is the minor pair, vice versa is happening. And then when the US dollar is minor pair and the other pair is the major pair that's in front, the opposite will be happening. Whatever that's happening with the dollar, the opposite will be happening based on where US dollar is placed in that currency. So I hope this really helps us this week to really, expand our knowledge on what is happening. This is educational content, ladies and gentlemen. You know, please, please, please make sure that you manage yourself properly, and just make sure that you're here to just learn, because this is all entertainment and this is all education. Thank you so much for tuning in with us, Zaza Academy. For those who wants to, check us out, just feel free to do so. I appreciate you guys so much. Peace and blessings.